Hi guys, I'm Phil Town from Rule One Investing, and today I want to talk to you about whether or not I think we're in a tech bubble. The stock market has been bonkers this year. I mean, ever since this gigantic drop in last March, and then we've just been on this runaway upward price movement, and all of a sudden, things are starting to change a little bit, aren't they now? So companies are getting massively overpriced, maybe so much so that people are starting to get a little bit nervous. And by the way, we've seen some incredible shorting. We've seen squeezes of short sellers. We've seen little guys coming in out of absolutely left field on some Reddit thing and just crush huge hedge funds. This is unprecedented revolution going on in investing, and crazy events are happening everywhere, many of which seem a lot like what happens at a market top, but it's still very hard to tell what might come next for sure. So some people are going to argue that we're in a tech bubble, right? That a huge percentage of the stock market is driven by, the five FANG stocks, and it's not particularly hard to see why people are worried about that possibility. And that's what I'm going to be covering in this video today. Now, lately, this market is trying to dip off, right? We're seeing the thing peak and kind of come off the top, and pretty significant amount of indication that we very, very, very close to getting to a bubble pop. Now, let's find out kind of what the definition of that might be and why I would think that there are indications of kind of the end is near, right? And think about some guy standing there with that sandwich sign on him. The end is near. So tech bubbles are basically happening when there's so much exuberance about a specific group of companies in technology that the price just gets ridiculously overly exuberant. The pandemic really accelerated the growth of many tech companies. I mean, companies like Zoom just came exploding into the forefront of technology because of all of us having to work from home. You see more and more people relying on so much about what's going on in their computer. And so obviously these tech companies saw a lot of benefit from that financially. But what happens with a bubble is that the good news starts to beget kind of a momentum to it, essentially. And that momentum starts to take over from the news itself and become its own living creature. Basically, what happens in momentums that start to build in a bubble is that people make money in a stock or in real estate or in tulips or whatever. And the news that this relatively ordinary person, my idiot next door neighbor, just made $1 million in GameStop rattles a normal person and gets him emotionally cranked up. Now, what we know for sure is that the stock market is anything but what academics think it is. Academics think and have thought for 40 years that the stock market is a very rational place. I think we're all starting to rapidly see the destruction of that kind of theory. But what is the market if it's not necessarily a rational place? And we've had 3 Nobel Prizes now have been awarded to economists who study behavior. And they've come out and proven that the stock market is fundamentally emotional, not fundamentally irrational. In other words, it is the normal process of a stock market to get into bubbles and irrational exuberance, followed by enormous collapse of the market prices themselves. So when we see growth that is definitely not sustainable, that is, Zoom just simply can't sustain this level of growth, we got a choice. We can either get caught up in the momentum of this thing emotionally and just know that this is going to get bigger tomorrow, which is what people are doing, and what people did in 1999, by the way. I never will forget. Yahoo hit 19,000 PE ratio, which meant at that point in time, Yahoo would have to become the entire GDP of America to make it worth paying that for the company, which is impossible, right? I mean, presumably, you wouldn't spend all the money of America on buying Yahoo ads. So why would that price get so high? And it's simply because it had been going up and people get emotionally connected into it. That's what a bubble is. And man alive, there's a lot of evidence that that's what's going on out there right now. So I know one of the questions is, will companies like Zoom fare better after the pandemic when people start coming back to work in our offices? Will things change in the office? Is there a big factor that's going to happen with that and that's creating this bubble. President Biden's stimulus plan, President Trump spent about $6 trillion between the Federal Reserve and what he was doing. And President Biden is planning on spending that much again. $12 trillion is about half of GDP that just got printed. Now, this isn't money that's been taxed that we can spend. This is money that just was printed. And by the way, if you don't know how that happens, it's really simple. The Federal Reserve simply makes a notation on its books that it has $2 trillion, and then it takes the $2 trillion and walks over to the Treasury and buys Treasury bonds. That puts the $2 trillion into the hands of the federal government, and they go out and spend it. And all of a sudden, there's $2 trillion we didn't have. If you didn't know this, last year, in 2020, we printed 36% of all the US dollars ever printed in history. So you guys, this enormous amount of pressure on inflation. Now, the Federal Reserve doesn't think that we're going to have inflation. They think it's just temporary. But amazingly, the Federal Reserve looks at what's called CPI, or Consumer Price Index. That is a carefully curated list of products and services that the Federal Reserve uses to determine if there's inflation. Now, guess what? The three most important things to spend money on for you and me are energy, housing, and food. And none of them are included in the CPI, which is truly amazing. If they included them, it's estimated that the current CPI for like last month, which is about 4% growth rate annually, would be double that minimum. I mean, you may have noticed that housing prices are going off the chart, way worse even than in 2007. And by the way, what's going to follow will be rent raises. So you guys, we're seeing inflation coming, and the Federal Reserve has finally started to admit it, that, oh yeah, maybe we got something coming here. And as soon as they start talking like that, the market starts to tumble. Now here's why. Because the market is deeply related. Market prices are deeply related in modern portfolio theory to the interest rates. And if the Federal Reserve thinks inflation is starting up, their only cure for that is to start letting interest rates rise. Now, what they've been doing to keep interest rates from rising is buying $120 billion a month of mortgage bonds and treasury bonds, just printing money like crazy. That's $2 trillion a year on top of what Biden's doing. And you guys, that is keeping interest rates lower. But some more things have happened here that are very scary. One of the things that's happened is, for the first time in years and years, decades, we are seeing a net outflow of U.S. treasuries. It used to be that money was coming in from overseas to buy U.S. treasuries more than it was going out. Now, more is going out than is buying. So our foreign investors are starting to slink away from the U.S. dollar. This is going to be a real problem. So what I think is, I think it's extremely likely that we're in a massive tech bubble, and I think it's going to pop. If it hasn't already started, this wouldn't be the first time. I was around in 1999 when that baby busted. Late 1990s rather, the tech market was pricing things that just off the chart, like there was never going to be a tomorrow. And there was this excessive speculation in internet-related companies. And man, when it busted, the market in a whole went down about 50%. Now, I got to tell you guys, bubbles are just part of what the tech world is all about. I mean, I've been involved in a number of them where I was deeply involved in investing in them. And you can just say it's just part of the DNA, right? Everybody gets so excited about the next great thing. Everybody buys it. Then it doesn't quite meet expectations, or somebody else comes up with something better, and boom, it goes away. I mean, I was there with Steve Jobs when he was building the next computer. It was like the hottest thing you could ever imagine. And the company that I was funding was busy putting their money into this computer because it was the next big thing. And then it blew up. And basically the next computer was bought out by Apple. All the software that was built for the next computer had to be pushed over to some other kind of form. It was an amazing, amazing, crazy time. So I've been through it very, very hands-on. And I got to tell you, what you got to have ready when a bubble pops is you got to have a cash flow. You've got to have money sitting there that you're going to be able to access. What Warren Buffett says is like this: every once in a while, like every 10 years or so, there's going to be this economic storm. This is the bubble popping. And when you have an economic storm and it starts to rain gold, you want to go outside with a giant, giant huge bin, right? You want to go out there with a wash tub. You want to go out there with a bathtub. You want to go out there with a pickup truck. I don't know. What's the biggest thing you can think of? So it's coming. I do believe it's coming that these tech companies are going to start signaling that things have peaked. I want you to do your own research, okay? Don't just rely on this as like, oh yeah, I've got a magic crystal ball, because I don't. I am just getting prepared. Now, if being prepared means being more in cash, then fine, I'll be more in cash. But what I want to be sure of is I'm not sitting there and watch everything I own go down by 50% and not have any money to be able to take advantage of the new low prices. So keep your eyes out for companies. Here's what I'd be looking for: that won't be affected by future inflation in a negative way. I want companies that actually can grow with inflation. And guys, be ready when the time is right. So be careful, right? You got to be careful, because it's likely some of these companies that are so wonderful and they're going to grow with inflation are already overpriced like crazy. And it's going to take a while for them to reach their margin of safety. So just listen to the critical words of Charlie Munger. We make money while we wait. We make money while we wait. So be patient. We like to be patient, almost next to sloth, and do nothing while we're basically stacking up a list of companies that we want to buy. Get over to the 3-day virtual workshop, you guys, because I'll tell you what we're going to do there on this next one. We're going to look through hundreds of businesses, and we're going to find the 10 best ones that will be as anti-fragile and inflation-proof as possible. And we're going to get those in the hands of everybody at that workshop as a great starting point to be ready for this next big crash. Now, I'd love to hear from you guys. Do you think we're in a tech bubble or not? Leave a comment with your answer below, and I'll be sure to follow up with you. And thanks for watching. Now go play. You guys, if you enjoyed this video and you feel it was valuable in teaching you more about whether or not I think we're in a tech bubble or some kind of bubble, hit the like button and please share the video with your friends. And if you want more investing content, subscribe to this channel. And don't forget, click the button on the screen for a free gift. And thanks again for watching.